Hey everyone, it's Larry Berman here. I'm at a charity hockey tournament where we get to play with ex-NHL players. Um, Tournament this year raised $1.5 million. Berman's Call viewers will remember in recent years where we did our road shows across Canada that we used a lot of that to do fundraising for the tournament. And given that we're not doing the road shows anymore, um, we didn't go out to BNN viewers, but thanks to those of you who reached out to me and made donations. Fantastic. The charity for Alzheimer and dementia raised over $1.5 million. And my team, Team Q Wealth, this year raised 174,000 of that 1.5 million. So very excited here. We're at the event, but I got to get back on the ice. You can see the ice behind me here. It's waiting for me. So very quickly, let's take a dive into the chart room and see what we learned. Okay, so daily chart of the S&P the last couple months here. And so, we've bounced off of better than expected numbers this week, economic numbers. So the combination of inflation and growth numbers painted a little bit more of a softer landing picture. When you look at earnings, again, Apple this week was a big one where they didn't really beat like Apple tends to beat, but it was the buybacks that really excited the market, and the commentary that China wasn't as big a drag as many had feared. So we'll take a look at Apple in a minute, but on the S&P 500, we're now coming against this resistance that the market was grinding higher in March, and as we got into yields starting to rise, when we talked about the quarterly refunding and all the supply coming. So this week we got the details on that. And while it wasn't as bad as it could have been, and Janet is made the choice to do a lot more bills funding than worst case scenario, doesn't change the fact that tax receipts are softer than expected and deficit spending is higher than expected. She increased the size of the TGA, but to offset that, the Fed is starting to taper, or starting their QT, lowering the QT taper. So the size of the balance sheet is going to continue to fall, but at a slower pace. You throw all those things in the hopper, and it wasn't as bad as feared, and so the markets recovered and bounced this week. So as I sit here a little after 2, I got to be in the ice at 2:15. As I sit here a little after 2, you can see but we're bouncing up into this resistance. And so I don't think we're going to break through it. I don't think the market has the catalyst to do that this time around. So we added some long puts and put spreads to portfolios this week to get a little bit more defensive, where a few weeks ago when we were starting to get into the area of support, and the closer we got to 4,800, we were starting to unwind some of those hedges that we had established into this area where we felt valuation was pretty much unsustainable. Apple very quickly here, running through the analyst upgrades and downgrades post earnings, and you can see all the names here. The biggest one, two actually, Dan Ives and Tony Saganagi. Terrible. I apologize for blowing your name there. Anyways, when you look at Dan Ives, he's been outperformed. If you look at the history of him on Apple, you basically can see that he's been at 250 for Apple, 240, 230. So, going back into, so he upgraded it from 240 to 250, but this is going back 6 months. So all the new information that came today, the buybacks and everything else, hasn't changed his price target. You can see the changes here over time relative to what he thought. Go back into 2022, and he was at 220 for Apple, and we've never come close to that. So these guys don't know what it's worth. This guy in particular tells a story, and he's always pumping the good news on these tech names. He's a very good analyst, don't get me wrong, but where they think it could go is not necessarily where it's going to go. Anyways, we'll got to watch Apple closely here as being one of the biggest weights in the world index, and in the U.S. in particular. So we'll see how those buybacks play out over the next couple of quarters. What it does do is very much put support under the market in a big way. So unless the macro does something to compress yields, or compress multiples as yields go higher, we think that's coming. But again, that's been pushed out too with Janet Yellen. So market's probably stable here. No reason to get overly bearish, but at the same time, no reason to get bullish again at this point. Like what we learned this week doesn't change that dynamic, that the markets are pretty expensive here, but the urgency of multiple compression and higher yields have been lowered. So that's kind of the message of the week. And we'll just wait to see how the balance of earnings season. Nvidia in a couple of weeks is probably the next big thing we have to look at from an earnings perspective. And of course, what is the inflation numbers going to tell us? The employment cost index this week was on the high side. When payrolls came in, it was on the soft side. A lot of mixed messages in the market here. So that should add uncertainty, which probably means range bound. So that's it for me. Back on the ice. Have a great weekend, everybody.